Shares of Snap rising sharply on a partnership with Amazon. The information is reporting that the deal would allow people to buy Amazon products directly from ads on the Snapchat app. For more on this, we turn to Brent Thill, Jefferies senior analyst. Brent, it's great to see you. And you're just the man to talk to about this, Brent. So Amazon, the Snap arrangement, folks are pointing out, Brent, Amazon has similar tie-ups with Meta, with Pinterest. How excited should Amazon investors be about these arrangements?
I think it's another nice to have. I don't know if it's a must have. And I think the challenge that we've had with Snap is that you have a younger demographic that uses it for messaging and doesn't use it to transact. And so one of the key issues that Snap has faced is you talk to most teenagers that are on the platform, they're on it to message, they're not on it to consume and engage and buy things. And so I think that's clearly with Amazon, it's a great opportunity. I think most of the younger demographic doesn't have a lot of money, so Amazon products can be lower cost and it can be a great way to get the awareness built among those younger users. But I think that the real issue has just been conversion, and ultimately is anyone on the system that is a younger audience going to really engage and interact. And in our research, they go to Instagram to interact with brands, and that experience has been seamless. That has not happened at Snap. So real big opportunity obviously for Amazon as another platform. As you mentioned, they're on Pinterest now, they're on other channels, and for Snap, they need anything they can to get things to get this game changed around, because right now they're having a very difficult time.
I mean, what else can they do, Brent? If this is a cohort that just isn't using the platform to transact, like, how do you change that kind of behavior? Or is there another way to monetize them that they're not taking advantage of?
Yeah, I mean, it's a great question. It's one that I ask my kids all the time because they're on the platform literally 24/7. And I'm like, are you ever influenced by anything? And the answer is really no. And so it's a tough one. And as you've seen, there's been multiple management departures. There's been a revolving door of different line managers. It's been difficult. So never say never. But right now, I don't know what the breakout play is at this point. I don't know if anyone believes there is a mass breakout play at this point. So we're in a situation right now. I think we're in a wait and see. These are all these partnerships are nice, but as they've said in the tech industry, is this a Barney partnership? I love you, you love me. Everyone hugs on stage and disappears, nothing happens. So I don't know if this is a Barney or not.
I've never heard that before. I love that.
Yeah, but I'm stealing it. Brent, I want to switch gears here. As we head into 2024, the boom of interest in AI continues. And I've heard you, Brent, make sort of an interesting analogy when you're talking about AI. I've heard you sort of compare it to 1995, 1996, ahead of the internet. What did you mean by that analogy?
I think the analogy is everyone in the industry is saying that this could be bigger than the internet. And I think everyone's having a hard time really digesting what that means. Sundar Pichai said that at Google. And ultimately, I think, and when we see these big tectonic shifts, right, when we saw mobility, we saw internet, we saw you wanted to stay long these names in front of these cycles and through the cycle. And ultimately, we're going to hit a bubble. We're not at the bubble now because valuations aren't crazy given the post-pandemic sell-off and the multiple contraction we saw last year. But I think we're in that moment where AI is going to have a big impact over the next 2 to 3 years. None of these products and software are really having a big impact now. They're going to have a big impact in 24. Remember, all the software companies are buying, the semiconductor companies are buying NVIDIA and AMD to build these services. So these services come live next year, and this revenue wave will hit. It hasn't hit today. And we think, again, if you listen to anyone in the industry, they'll say that this is a way bigger impact than Web3, way bigger impact than crypto, way bigger impact than anything we've seen. And again, the best minds have gone back to that mid-90s comment that this is like, would you want to be long the internet, all these internet names from 95 to 99? And the answer was yes. And so I think we're seeing that now with Microsoft up 55% year to date. We're seeing this with Amazon up 73% year to date with the move with AI, and we're just getting started. I mean, none of these companies have monetized in a big way any of these services yet. That will happen next year. So I think, it feels really good. It feels like things are about to build, but again, many stocks are reflecting how big an opportunity with the move we've had already year to date.
I'm also curious about the backdrop here. We're seeing evidence of it today when rates are falling, tech stocks are just taking off, right? I mean, does that enable more of a move, on top of the AI story over the next year? Does it also enable more froth maybe in these names as well?
Maybe. I think, look, it's been a tale of two cities. Like our hedge fund clients in general, a lot of them have not had good years. A lot of hedge fund performance has been terrible. So a lot of this is hedge fund chasing. I spoke to our trader just before the segment to get color. We're not seeing a lot of our clients chase this move yet. So to answer, I don't think anyone is chasing this move right now, but it's very true. A lot of the hedge funds have had tough years. A lot of the data suggests that some of these funds are up mid to high single digit versus any index. The semi hardware or semi software indexes are all up mid 40 to mid 50%, just owning an index of a basket of names. I mean, that's an incredible move to then be underpinning with a 4, 5, 6% return year to date. So I think we're definitely in chase mode. We're going to be in chase mode from a lot of our funds trying to make up performance for the end of the year. And my sense is, yeah, I think I haven't seen the froth yet, and we certainly haven't seen multiples yet go crazy. We've talked a lot about a $15 earning number for Microsoft. A 30 multiple is going to get to $450 in the stock. That's not very frothy. So we haven't seen it yet. Could we see it into next year? Perhaps. But right now, I'd say we're kind of the calm before the storm. But this is when you want to be invested and then use the froth as an opportunity to exit.
All right, Brent Thill from Jefferies. Thank you so much, Brent, for that time and insight. We love having you on.
Good to see you.